HELOC versus extra mortgage payments. What's the fastest way?
Oh, HELOC. And let me make it I'll make it simple and complicated. I'll make it simple for the people that just want it simple, and I'll make it complicated for the nerds, all right? Which one do you think is going to be quickest to pay off? The one that can encapsulate all of your income and utilize all of your income, or the one that you can only utilize some of your income? Because all of your income. So the reason why the HELOC can utilize all of your income is because it's liquid. You could put 100% of your money in knowing that it's safe and you can access it within 5 minutes if you need to pay bills or emergency or whatever. Once you put money into the mortgage, I don't want to say it's gone forever, but there are only two ways to get access to it now, which is refinance or sell, right? And that's by design. When we talk about mortgages, the modern day mortgage, the one that we consume that we think has always been around, has been around for less than 100 years. It's been, 96 years, roughly 96 years. So less than 100 years, what we consume that we think is normal and that generations, our great-great-grandfathers, this is what they did. No, they absolutely did not. This is a new product on the financial scene that we're still participating in that we thought has always been around. So you don't have that luxury in a mortgage because it's designed to segregate your income. It's a closed-end product. It's an installment loan, just like a car loan, just like a student loan, just like a personal loan, all these other products that we consume, because that's what we're good at as Americans, is be consumers. It's designed that way to segregate and separate you from your cash. A HELOC is going back to basics. It's utilizing 100% of it. It is not only your home loan, it is also your checking account. So it's utilizing every single dollar you make. So just by pure logic, without even doing math, it's easy to say the HELOC is faster than the mortgage. Now, can you make extra payments on your mortgage and pay your mortgage off sooner? Absolutely. Everybody knows that. That's easy. Now, what some people surprisingly still don't know is you could do what's called biweekly payments to accelerate the payoff of your mortgage, which means if your mortgage payment is $1,000, you cut it in half, it's $500, and you pay that every 2 weeks. That's 26 half payments, which equal 13 full payments. So you're making one extra payment a year. So if you had a 30-year mortgage, you could knock it down to, let's say, 25, 24 years. But the overwhelming majority of Americans never pay extra on their mortgage. We get these calls. It's like, all right, well, why don't I just pay extra on my mortgage? I'm like, cool. Have you done that before? No. You've never done it before? No. Why do you think that's going to change in the future? Well, I don't know, just because now I'm more educated. Like, here's why it won't change. You don't have the confidence. You can't see around the corner. Just like, that previous call, he's asking, what the economy looks like in the next administration or the next year or the next 5 years. I don't know. And anybody that tells you they do know is lying to you. They're just trying to prop themselves up as an expert. Nobody knows. I do my best to see 1 quarter ahead. And if I'm doing that, I'm doing a good job. So, where was I at? Oh, extra mortgage payment. So you're saying that now that you're more educated, you're going to pay extra. You're not, because you don't have the confidence to part with your cash. You don't know what's around the bend. There could be an emergency. There could be an opportunity. And now you don't have that liquidity. You've stored it in this vessel that's called your home, and you don't have access to it. It's a buried treasure. It's in the bank's treasure chest, not yours. And you're paying their home off first before you even pay your home off first. So with a HELOC, I have 100% liquidity within 5 minutes. I can put it all in there. So you can do biweekly, but you're never going to utilize 100% of your money in a mortgage. So you make 10 grand, you got 5,000 expenses. Month 1, you put 10 grand in there, you've realized you made a major mistake because now there's no money left to pay those expenses. Utilities, power gets cut off, cable bill, etc. Because you didn't pay them. And if you don't pay them 1 month, try not paying your cable bill 1 month. I say cable, I'm dating myself. People don't pay for cable anymore, do they? Internet. Let's call it internet. Cut off the internet. They cut it off. You don't have service. With a HELOC, money in is also money out. So now mathematically, They also compute interest differently. A mortgage is an amortization schedule. So 360 payments. You sign the contract, the mortgage, aka death pledge. It says on month 248 of your $1,000 payment, we've already predetermined this much of your $1,000 is going towards principal and this much is going towards interest. On a HELOC, you're in control. Almost entirely in control. So when your money goes in, let's say it's day one of the month, you get paid 10 grand. Use easy math here. It's a $100,000 balance. Tomorrow, the interest gets recalculated based on 90,000. So it's called per diem, daily interest. So it's 90,000 times your interest rate divided by 365 days in a year. That's what your per diem is. So every time the balance goes down, guess what else goes down? Your per diem. So just like when it comes to earning money and compounding, the same thing happens with simple interest debt. If you save money, it compounds. It may look small in month one, but if you pan out and look at year two, you're like, holy crap, I put a healthy dent in it. And now year three, it's like it starts to get even faster. The original question was, can you, I don't know why I keep doing this, the paying extra on the mortgage versus the HELOC.
Faster to pay my house off.
Yeah. So now we also have the mathematical calculation in our favor, which is the recasting nature of a home equity line of credit. You know, some people, believe it or not, most people don't know that you can recast your mortgage. Now, not all lenders allow this, but some lenders that do allow you to recast your mortgage, it's highly protected and highly secretive, right? What that means is, let's say you originally owed $300,000, amortization is based on $300,000, you owe $200,000 and you sold another property and $100,000 falls from the sky. You're like, you know what? I'm gonna put $100,000 straight to my mortgage payment. Now my balance is $100 grand, but I don't want to continue the same payment that started off based on $300,000. So maybe that was a $2,500 payment, now I owe $100,000. If I were to recast that back to 30 years, then my payment actually becomes $1,000, right? So that's called recasting. And it's highly protected and highly secretive. The reason why I say it's highly protected is all you gotta do is follow the guidelines and the money on this. So of the lenders that allow you to do it, the ones that do allow you, they say you can only do it twice over the lifetime of that loan. Just ask the question, why? Why only twice? Why not 20? Why not 50? Why not every day? There's a reason, because it's a mathematical fact in your favor. The other thing is they charge you money to do it too. So to me, that's a deterrent. So not only is it a money grab, but they also want to charge you a fee associated with it so that it's a deterrent for you making the decision to even want to do it to begin with. And the cool thing is the HELOC does that automatically every single day for free. And you don't have to ask for permission, it's just automatically going to do it. So now you got the mathematical side on your favor. So I've answered it the short form, logical way, utilizing 100% of your money versus some of your money. Obviously, the one that's utilizing every single dollar to get a job and suppress interest and suppress balance, that's logically the best way. Then I've also answered the mathematical way. And again, that's coming from somebody that did mortgages for 17 years. I wish it were not true. And I know that's so weird. It's like, well, you own a business. You got a business for 10 years. And well, there's a reason why I do. There's a reason why I started this business, because I believed not in the business and not in the making money aspect of it. I believed in the impact of it, what it did for me and my family and friends. Was that I wanted to share that with somebody else, but I didn't yet know. I was already sharing it with other people, but I just didn't know how to make money off of it. I wasn't making money off of it. If it weren't true, then this would be an entirely different conversation for multiple reasons. I would be making infinitely more money, a lot more money, because mortgages are very, very profitable. And as we've said before, profits come from consumers overspending. So do you want to consume the one that has the highest profits and highest commissions, or do you want to consume the one that has the lowest profits and no commissions? And that's the difference between a mortgage and a HELOC. So again, that's just a snippet of, the rabbit trail that is this strategy. And if you'd like to learn more, it's as simple as just going to replaceyourmortgage.com and sign up for our free material. If that's all you ever do, that's fine. I hope I've provided value for free. In exchange, I got your email address, and you might get some annoying emails from me every now and then. I would love to talk to you on the phone and do a one-on-one consultation and hopefully convince you to do it far more efficiently with the help of us. I'm a big believer in coaches and mentors, that is the time condensing aspect of getting to where you want to be, is shortening that time frame. That saves you money and infinitely makes you more money. But if that's all you ever do is you just sign up to consume free information, cool. I hope I was providing some value to you. But that's all you got to do is just go to replace your mortgage. And when it's time, the time is right for you, simple button there. Hey, I want a discovery call. I want to see what this really looks like and how it would work for me. Just click it. If you want to, we don't have high pressure sales. So if you want to do it, cool. If you don't, no problem. We'll love on you. We'll give you some homework. Wish you the best.